Hello, this is Team Malone with ComsFX. I hope you're doing well today and against some good trades. Here's one to keep your eye on, the dollar CAD. I have reason to believe that the dollar CAD will push higher unless we see some movement related to the BOC interest rate announcement later this week on Wednesday. Now, last week we had a situation where the unemployment rate for Canada came out worse than expected at negative 9,400. The market was looking for a better number, like closer to 20,000. It was a completely opposite in the wrong direction and increased the unemployment rate for Canada to negative 7.1%. With that bad news, we got this immediate push up in the CAD, weakening of the CAD, strengthening the dollar, and we saw this big move to the upside. Well, we've had a bit of a move back down, but look at sentiment here. In the Traders Dynamic Index, it's gone from one far side all the way to the other side, and a bit of an overshoot here on the market baseline of the 50%. So that leads me to believe that there's a potential that we're going to see a move higher in the dollar CAD, and we may get that before the BOC interest rate announcement. Now, no one's expecting to get anything different from the BOC as far as interest rates are concerned. It's expected to stay at 1%. But given Governor Pelosi's stance as of late on the potential weakness of the CAD, I suspect that we may see some movement on up in the dollar CAD. So let's take a look and break this down technically. Here we were last week when that poor unemployment number came out, and it made a strong move up on the 11th. And as of right now, from that low to the high, we've seen it move back, but not yet get back to the standard profit-taking Fibonacci level of 38.2. And some were expecting to see it fall back towards this level here, right around 674 level. Others, if you step out and look at the hourly chart, were looking for it to get back to this level here. And it hasn't gotten back to that. That's right at about the 690 level. Right now we're sitting here and we haven't even gotten back to the 700 level, staying all day pretty much on top of that. Well, what doesn't go down usually goes up. So let's take a look at this a little bit more in detail. If I go down the 15-minute chart, today it's pretty much moved just a little bit back to the downside here. A move of about 33 pips is all that we've seen in the movement for the day. It's got an average daily range of about 50 pips, and we're seeing a bit of move back, but not necessarily as much as some of the market has expected. So if we don't get a move on back down due to potential dollar weakness, CAD strength in the marketplace, I'm looking for it to push up. You can see again here in the 15-minute chart, already down here at the 32 level. Usually when the TDI has all the levels down low like this, there's going to eventually be a shift back up. And you can see in the Traders Dynamic Index we have a low, a lower low, and a higher low. That right there is an inverse head and shoulders or a rounded bottom, and I suspect a potential move back up. So let's go back to the hourly chart and see where we could potentially go to. Now with this move from this level, let me take it from here to that level back to the downside here just to see where we've gone to. We've pushed up to the 1618 last week from that swing high to swing low. We pushed up to that, tried to get a little bit higher. You can see the 200% is up there around the 107.56 level, and here we've come back down today and we've rested right on the 127.2 level. Now my thinking is there could be a test of the 700 or the 690, but if you go out to the bigger picture, I think what we're going to find is that the market has a level that it's resting on just about that area right there. See these lows back here? We're a little bit below that, but pretty much the market has been sitting right across those lows right there. And we have this level that we attempted to break, couldn't break it, the 750. So my thinking is, if this is a potential move up, and look here, low, higher lows, higher lows, all of this suggests upward movement still. So if we get a bounce back off the market baseline, the Traders Dynamic Index, and we stay above the 700 level, maybe dipping down to that 690 level, but if we don't do that, I'm looking for this to be the first move out, the pullback, and then we'll look for that next move out. And then when we get on top of the 750 level, there's nothing really keeping us from moving higher until we get up somewhere near this level here at about the 835 level. So again, my thinking is if we don't get anything that could be potential strength in the CAD, and there's no data expected until Wednesday when we get the manufacturing sales and the interest rate statement from the BOC, I really don't see anything potentially keeping this from pushing higher as long as the dollar index doesn't fall back below the 80 mark. If the dollar index falls back below 80 and we get weakness in the dollar, then we'll see some strengthening in the CAD and a potential fall back down. If we hold the 690 and the 700 level, if we hold in this level here and we don't drop below the 674 level or the 670 level, we don't drop below that, then I look for the push higher, and then we'll look for a move up to 750. The market will have to break the 750, but once we've broken 750, really a lot of the support and the range that we've had in the past goes back to this level here around the 835 level. Well, this is Dean Malone with Compass FX. You keep your eye on the dollar CAD for the potential move on up. Again tonight, look for that break back above 720 on to 750. A break of 750, we see a push up higher towards the 835. Well, y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.